Hello, hello, hello. Happy Friday. How is everyone doing? Good morning, Patrick. Thank you. You have a great weekend too. The weekend cannot come soon enough. Oh, what a week. And I was up with we had storms again early, very early this morning, and the dogs, one of them just gets terrified. So I've been up for like 6 hours already. So I'm running out of energy and the market's not open. Hey, Heinrich. So I will be glad when today's over. Also, my least favorite trading day, Fridays. And we have some volatility introduced by the Bank of Japan. Nice little day. I think this is going to carry forward. I got to be thinking about this weekend and do a little more research, but this could get very interesting in the coming weeks. All right, we had key numbers coming out this morning too. The Fed favorite indicator, the PCE, and core PCE for month over month coming in as forecast. Year over year coming in slightly better, 4.2 versus 4.1 versus 4.2. We have the PCE price index year over year coming in at 3, coming in way better than previous and better than the forecast of 3.1. And the month over month coming in line. Now, personal income coming in lower than forecast and lower than previous, and personal spending is up. So income's down, spending's up. So is credit being increased? So that's not a good sign for the consumer and the wage earner, but PCE numbers coming in better. I think these will bounce back over the next couple months, but this is a good sign for inflation. Coming up next, first, hey, Christoph, hey, Connor. We got in, 53 minutes? So at 9 a.m. Central, we got the consumer sentiment expectations and the inflation expectations. 5-year expected to come in at 3.1. Consumer expectations expected to continue to bounce higher. Current conditions expected to bounce higher. The short-term inflation expectations still expected to come in higher than previous. So we'll see if that holds up or if they come back down. If they come back down, if they miss to the downside on any of these inflation expectation numbers, you'll probably see a even stronger push higher in the markets. And then what else you have? You have rig counts. And you have the Dallas Fed PCE, but that's very minor. So that I'm just seeing if we missed anything. Nope. So far this morning, pretty green. All your mega caps after the pullback yesterday, which was pretty much related. Then we had the dovish ECB, and then you had the Bank of Japan, which sort of shook the markets, and we'll get into that more in a minute. And then they clarified stuff in our overnight, but really let me just refresh everything green this morning. Consumer, cyclical, comm services, technology. So it's definitely going to be one of those days so far if it continues based off pre-market. Based off our Fed Watch tool, let me just do a refresh real quick. A refresh. Oh, look, it's only 54 days to the next potential pause. So it's only 20% probability for a rate hike in September. Remember, there's nothing in August, but there is Jackson Hole in August. So, and it's extended with the first cut back to the 5 to 525 being projected for next May. Fear and greed still, even with yesterday's pullback in extreme greed. So nothing's much happened. We had ExxonMobil this morning, which was a miss on EPS, but a beat on revenue. Chevron was a beat. Procter & Gamble was a beat. Procter & Gamble up also this morning. That was pretty key from that was it. So we started kicking off with the oil earnings. So you see the volatility. We got the pullback, the key level we had on the chart 45.57. I was watching 45.50 to 45.57. Low yesterday was 45.53.75. We had an outside key reversal day, which makes yesterday's lows very important if they're taken out. So I'm going to bump this line down to yesterday's lows. This is where I will watch yesterday's lows. Not expecting it to be taken out today based off the overnight and pre-open rally snapback. Key stuff I am watching for. Hold on. Key stuff I am watching for. 4604 heading into the open. 4604 is a very key level you see here. That was the prior double top, broke out from there. Then you had the collapse back down, forming the little double bottom pattern right here. So, and right now, I'm actually looking at the more aggressive targets so far based on this pullback. First target has just been hit. Second target lines up exactly with that, 4604, 4605, then 4612 with the breakdown level. And if we do the harmonics from yesterday, you see here the second target right with the 62.5. We get I'll be watching for a 4-hour close above that. So that's what I'm paying attention to. And since the first target was hit right now, what would invalidate the pattern, the farthest away, which will go with the farthest away, would be a close back below on a 1-hour basis 45.70.25 or a trade below 45.64. Otherwise, the bias, even if we turn into a choppy day, would stay up entering the beginning of next week. So, Fridays aren't always boring, brah. Check the DA. Let's do that right now. I did not notice it. Yep. Thank you for Delta Airlines double top. Looks like it triggered yesterday. So, should see a continued pullback after hitting that 87.5. So it closed above the 62.5, went to the 87.5, formed a double top right there. So we'll see how that plays out. All right, back to the regulars. Thank you, Christoph. Thank you for pointing that out. By the way, this is after hitting the first target, which is traditionally a stop raise target, was stopped yesterday with the volatility that came in, and now we're bouncing back. So right now, going to pay attention to this 15.730 area. Above that is still 15.845. Then I'm just using the harmonic areas, roughly yesterday's little intraday high before the pullback, coming in about 15.9, then to 15.918. On support areas, I'm watching 15.647, and then major support about 15.550 area. The Dow, let's just see what that looks like on the daily chart too. I meant the daily chart, still holding the rotation zone. So the key level on a closing basis, and I doubt it will happen today, but you always prepared, is about 15,005. A close back below there would be the first close in a rotation zone back since May. So please keep that in mind also. Then I'd be watching for a pullback closer to the 50, but there's nothing indicating that that's going to happen today. What else do we have? We have the Dow. Remember, the Dow hit the 87.5 yesterday before pulling back, and now is caught on the daily rotation zone. Again, the Dow, yesterday's low with the outside key reversal day, is the important level. So keep an eye, even heading into next week, at the low. Other than that, pretty much I'm watching for the short-term harmonic bounce from using the retracements right here. So 35,657 is a key level I'm watching. Anywhere between what we just hit, this 35,595 and 35,657, I'll be watching for potential anything in the shorter term toppy. We close above 35,657. We'll then be focusing on the retest of the highs. We have Sterling, let's see, Sterling, I jumped on the trigger double top in Russell and closed yesterday, keeping the fingers crossed that we roll over at the open. We also have, yeah, that was triggered. And now just know we also have a double, the minor little double that's triggered. And pretty much the first and second targets have been hit. So could it continue to this 1989? Yes. So keep that in mind. Keep that in mind, and anywhere between 1985 to 1992 is the key rollover zone for the Russell, and you have the bigger as Sterling what word am I looking for? Messaged, I guess messaged or let everybody know in the chat. Boy, my brain's just not working. We have the triggered double top from yesterday. So and the official stop on that, the farthest away official stop, which is what I'm utilizing for this, and if I could, it's just going to be one of those days. It's a day to not do much. The official stop is still on a closing basis 1995. So if you see here, because we didn't hit stop reduction, you still have to use the highs to the lows, the official stop, so you could finish this double pattern and even on the bigger move, hit the rollover zone and then roll over. All right? And that doesn't have to happen today. But, so this smaller pattern could play out before the bigger rollover, but on a stop basis, it's 1995.8 would invalidate this little double top, and or a trade, because that needs a daily close, or a trade through 2001.4 intraday invalidates it. Also remember, it is of the lower probability variety because it is against the daily rotation zone, but that doesn't mean it's still well above 50%. It's just of the lower probability. All right, Jake, what do you got going on here? What criteria do you consider when deciding if you'll carry a position overnight or not? Again, it depends on the time frames. For swing trading, like if daily patterns are triggered, they're carried overnight. Intraday patterns, if they're close to targets and we're going into a weekend, not so much, especially with, yesterday showed there's a lot, even though this is a good question, you know, because in this market environment, the way it's been, I'm not liking to hold stuff over the weekend a lot because a lot of times you can still get in it on Sunday. So I'd rather exit and then re-enter, especially on anything from the short side, because of it's been so bullish. Other than that, the longer term patterns are definitely held, like weeklies and dailies. 4 hours is situational and it's mainly weekend based. If it's a shorter term pattern, like I don't hold, let's say we triggered a 15-minute double or a 1 hour double, and let's say it's slightly in the profit and we're going into the close on Friday, I don't bother. I'll look at it again if it's still valid on Sunday. I'm not carrying it. Now, overnight, standard overnight, unless you're expecting major volatility, and you need to manage a stop, and especially a stop raise, that's something to consider if you're not going to be in front of your computer and you don't have a way to automatically manage your stop. VIX with a little bounce back yesterday, but look at that. Remember the key level's 15? What was 15.02 yesterday, and then closing back down and now rotating down. So that's why I'm watching. 15 is key. 15 is key. All right, so that's still key. The DAX, we yesterday hit the 87.5, today falling through to the 100, and we still, if we break above this 16,572, 16,7, 16,699, and then 16,825. The notes, nice volatility yesterday, closing below the 62.5, So, and we already bounced a bit, but I'm still going to be watching for a follow-through rollover to retest this low from the first week of June. In the notes, you look at the yield. The yield also closing above the 62.5, so I'm definitely watching for back over 4.03, 4.04 roughly over the next few days. And the twos actually, 2-year yield, come on, pulling back, which led to a pretty decent run against the key resistance in the 10-2s. But I'll be seeing if we get a close back above minus 79 basis points. Dollar index. Lots of volatility there between the ECB and the Bank of Japan. Coming up, I was talking about continued watching for it to hit the 50, which was also at the breakdown zone. We did it, and I put on the harmonics from the little down move, 62.5. If we close above this level then, roughly 101.64, just 101.65, then I'll watch for the continued move higher in the dollar index, and we could very well tackle the next major area with the 87 and a return to the 200 at that 87.5. But we need to get here. It's getting overdone. Cycles are at the top right now, so I'm at least watching for some kind of pause. And with this little volatility today, we did pull back. You can see it here. We did pull back to a key support. So you have resistance and support. If we break below this minor support level, I'll watch for more of a pullback with cycles heading down. Crude, still not quite there. Still 8104 is the next target area. So crude is still key. Major support, even if minor support is about 78.50, major support is this 77 area, which is the breakout area, and the 200. And that would just be a return into the rotation zone. There's not a lot, besides cycles rolling over. We could get an extended pause, definitely retest the top of the rotation zone before taking that out. But unless we start getting a close back below 77, there isn't much. It would just be a standard pullback. Gold, lots of vaults, triggered a double yesterday and done with the Bank of Japan. This was the move. This was off of the Bank of Japan. So that's why you always got to use stops and be prepared. Sometimes your stops get triggered at a worse level than you expected. Right now, trading between the 50 and the 62, and also against some key resistance, so I'll be watching the shorter term stuff there. Well, the US dollar, Japanese yen is crazy these days because of the Bank of Japan. So merely, it's now a suggestion. That's why, if you do trade the yen, remember I've talked about this. Look at the move yesterday where they said changes would be coming. Broke. We've broken. Because it's been trading since it's been open for a while, the JGBs, which if you're on TradingView JP10Y, the peg before was 50, which was intervention level. They're not necessarily intervening. The hard line is now, I guess, 1. When's the last time we were trading at 1? Back in 2013. So if we start taking out 0.6, now they can intervene before 1. They didn't give explicit instructions unless I missed it. But they're not. They've loosened up that peg at 0.5. I'm watching if we start closing above 0.6. We start closing above 0.6, it could start getting interesting. But we know there'll probably be hard intervention at 1. But if they intervene before that, it's not explicitly stated. So that's where this gets the risk level for trading the US dollar Japanese yen's got up, and the Bank of Japan could shock markets with stuff. And if we start getting an unwind of the carry trade, which I don't have time to go into right now, It could get interesting also longer or more in the medium term for the U.S. Treasury market. But you can Google Japanese yen carry trade, and if you want to learn more about that. So that's where that volatility is. But if this is something, if you're not prepared and you got to use wider stops and smaller position sizes, from my perspective in U.S. dollar Japanese yen at this point, if you don't, I would not be increasing risk in this market right now. Euro holding the 50, spiking back down, but closing below the 62.5. So I will watch for some kind of rollover play again to take us down to the potential most recent lows based off that swing. And then if we start taking out that, you see the bigger 62.5 is at 108.75. We close below that. We could return to the 200. So that's the way I'm watching for that. Pound also closing pretty much right at the 62.5. I'm going to see how the next couple days play out there. Bitcoin, not much going on there. So real quick, Tesla. Tesla also yesterday, you had the Reuters report. If you didn't read that and you're trading Tesla, it could get interesting. And that was off their exaggerated mileage claims and the call center for, if you don't, just Google it. I'm not going to get into it. But the invalidating the reversal patterns, stopping that out. Now I'm really watching for the next rollover play to the 50 and then possibly breaking 240. Not today, but in the longer term. But that's the key level I'm still watching for the breakdown. Where else do we sit? The spiders and the Qs you see coming up to the cluster yesterday, trading 455.61, 456.43. I'd still use about 456.50 on intraday resistance, and then I go back to the 458.85 to 459.35. Otherwise, and yesterday with that key reversal, your major thing you're watching for in the spiders is, again, yesterday's low. Other than that, I'd use the harmonics off of yesterday's single bar. All right, and the key level to watch for on a 4-hour closing basis would be 456.50 area. That's exactly how I'd set that up. The Qs, which had the red running up to the first and second target before trailing out yesterday. The key line in the sand for the Qs is not yesterday's low. It's still the low from Monday the 24th. All right, 374.34. Other than that, I'd still use the highs from the 19th to the lows on the 24th and watch those. It did get above, on the shorter term basis you see, but no 4-hour close above here yet. So I'd still be watching on any continued rally the close 382.87 on a 4-hour basis. Then I'd be watching for the still unfilled gap from back on the 19th, and then a possible return to 386.28. No, I did notice that silver is not rallying with gold, but gold is more sensitive to this move. Silver is not, and silver also did trigger the double top and did not stop it. So I'm still watching for more downward pressure. I think gold will backfill. I think this was a rush into gold, and gold over the next week or so is going to backfill. Nice looking weekly double top according to Sterling. Yep. That is a weekly double top. It's of the lower probability variety because of where this side's positioned. And it's nowhere near triggering. But if that did trigger, it would be very interesting. I doubt it will. It will probably pull out here more sideways and invalidate it through an extended right-hand top before it ever triggers. But it's always valid to put it on your chart and continue to monitor it, because that would be a major shift in the markets. That would mean the Fed is cutting aggressively. So I got to go into the open. Hope everyone has a safe and wonderful trading day and a wonderful weekend. Thank you for tuning in, and I'll see everybody next week. Bye for now.